How's it, everyone? Thanks for tuning in on this choppy Thursday afternoon. A lot of indecision out in the markets right now. CPI data dropped yesterday. Jobs numbers came out, both reflecting easing inflation. Yet it seems like market participants really aren't buying it, right? There's really no signs when we look at the charts that inflation is actually easing. The rates are really breaking down and rolling over. Now, instead of focusing on the economic data that often gets revised in the future and is lagging by nature, or whatever the Fed has to say, often contradicting one another, let's focus on the charts, focus on price for a little bit of clarity. All right, let's dive in. First up, we have the US 10-year break-even inflation rate. Now, this is the 10-year yield on the nominal bond minus the US 10-year TIPS yield. So this is basically the real return on a US 10-year bond. So today's rate is around 325. So the real return isn't 325, it's about 225. Right? So that's what this chart is showing. It's a way to look at inflation expectations. What's interesting is that inflation expectations remain elevated, right? Inflation really hasn't gone anywhere, though there are potential signs that it's easing. And they stopped going down. Break-even stopped going down at their prior cycle highs from 2018. I mean, that's a level we've been pointing out for years. That's a year and a half. Those prior cycle highs are extremely important for risk assets in general, stocks and commodities. So I don't want to make the bet. I don't want to make the bet that inflation is rolling over while critical key risk assets, inflationary assets, remain above their respective prior cycle highs. I'm talking about crude oil. Check out this next chart. Crude oil futures overlaid with the US 10-year break-even inflation rate. Now, when we zoom out over the past 20 plus years, they look almost identical, moving tick for tick, right? So the reason is because crude oil is an inflationary asset, right? When inflation is rising, when it's elevated, when rates are on the rise, crude oil follows. And what's interesting about the break-even inflation rate being inflation expectations follows crude oil because crude oil and the price of crude oil is forward-looking. That's why we focus on price. That's why we focus on the markets, not lagging economic data. Again, that often gets revised. Now, again, if crude oil, which just reclaimed its respective 2018 highs, remains above those levels and continues to catch higher, which it is today, I want to make the bet that inflation is dead or over. I'd rather side with the fact that inflation is sticky. And when we look at commodities in general, that's what we're seeing. So instead of getting caught up in the gossip or whatever Fed president said today, or the economic data coming in, the increasing, jobless claims, or, the CPI starting to roll over. Focus on price. Focus on inflationary assets. That's a lot of information, right? And it's fact. Price, you can't argue with price. And at the end of the day, it's what pays. That's what I got today. Thanks for watching. If you have any questions, reach out at info@allstarcharts, and I'll catch you tomorrow. Have a good day, everybody.